on the key macro indicators to be released any moment. In fact, it's here, December RIP at 2.4% as against the ET Now poll of 1.7%. So there you go, the December RIP figure is in. It has come in at 2.4% as against 1.7% was our expectation. So much better than what we had anticipated it to be. I'm going to see if we're getting any breakup on this. I'm going to ask my producers also to start showing if you have the breakup of this data out at the moment. And as you can see on your screens, we have all of our guests ready to get to expert reactions on the RIP data. So we're joined by Rupa Rege, Tushar Arora, Neeraj, Gambhir, as well as Suvodeep Rakshit. Tushar Arora, I'm going to come to you first. Oh, the January CPI data is also out, 2.05%. We had anticipated 2.5%, has come in below our expectations. So, Tushar, a double delight? HDFC.
Well, your voice is very low, but I think, the IP number has come in higher than expected, and I think the surprise would have been on the manufacturing front, because I think electricity and mining were expected to do somewhere in the range of 3 to 4%, but if mining has been a little bit more than 1%, I think that would be a good number to, be cherished about. On the inflation, I'm not really sure. I didn't get a chance to hear you, but if it is close to 2.1, which I'm getting to hear, I think it's a very, very good number. It continues to be below the RBI's estimate, and I think it just reinforces expectations for a rate cut in April.
In fact, the CPI that I've gotten and that I have seen is below what Tushar just talked about. Rupa, let me come to you. Would you say it is a double delight? You don't have the next monetary policy till April. That's going to be very close to elections 2019. As it is, everybody's saying that the last policy was, you can call it the election rate cut. But having said that, a double delight for the economy, IIP way above estimates. CPI, clearly you're seeing a downward trajectory as well. Sanjeev Sanyal today, for example, said there is no inflation.
I don't consider it as a data point to rejoice, because 2.4 is not that high a number. It might have been higher than the consensus estimate, but we all knew that month of November was the festival month, and that's why some normalization has happened. But we had seen IIP prints cumulatively above 5%, 6% throughout this year. From there, the deceleration to 2.4% doesn't project any positive picture. On the other hand, for CPI, my forecast is spot on, because I had predicted it to be 2.1%, below the previous months of 2.19%, and we had seen deflation in food prices, especially pulses, then milk products and all. It had continued full swing, and plus demand conditions are muted, so I'm sure that has impacted core inflation reading. So I think it endorses in retrospect the RBI's action, and if we go by the inflation targeting framework, then definitely there is a scope for another rate cut soon.
Okay, Neeraj, let me come to you. Do you think the data coming out today certainly heightens the chance of another rate cut, which is still away in April? And would you agree with Rupa that there's no need to perhaps get ahead of ourselves? Even if this data is looking good, it is primarily for the festive season.
Yeah, I kind of agree that the 2.4% print on IIP isn't really something which is too great in terms of growth. In fact, we do have, as we look at some of the forward-looking indicators, we do have some concerns around how the growth is going to pan out next year, even though the RBI's forecast is at 7.4%. But I am kind of concerned about how we're going to achieve this 7.4%. So IIP at 2.4%, even though there is some pickup in manufacturing output, it's okay. It's better than the previous month's number, but it's not something that kind of gives a lot of hope about growth. As far as inflation is concerned, we are consistently below the forecasts, the consensus market forecast, which means the full disinflation continues to play its role out. So I do believe that if we continue with this kind of negative surprises on the inflation, an April rate cut probably is much more real than what we thought earlier.
Okay, fair point. Suvodeep, let me just come to you now. Look at the IIP jump, from 0.5% you've gone to 2.5%. It's a month-on-month comparison that I'm doing, and you're seeing a very healthy uptick in manufacturing. The December electricity production, I'd like to point out, has come down. The December capital goods production is certainly much better, 5.9% as against a negative 3.4% that you'd seen in November. December infrastructure output, 10.1% versus 5% in November. It's still very healthy, whether it's coming out and normalizing or whichever way you look at it, because you can't even blame it on the base factor when I look at a month-on-month comparison.
Well, my estimate was at 2.5%, so I don't think it was a surprise as such. So I think one thing that one should remember is that in December is the quarter end, so a bit of a lumpy order flows, etc. come in, and hence on the IIP side there is a bump up that we see on a month-on-month basis. Having said that, the 2.5% in itself is not symptomatic of any strength or any kind of recovery underway in the economy, because frankly I think the structural shift that we have seen, or the structural changes in terms of the investment cycle, continues. As in, there are few nascent indicators which indicate that investment cycle is there in the economy, but mostly the investment cycle is very, very nascent. So from that perspective, the IIP is just a number in the sense that it just shows that yes, there is a bit of a pickup that we have seen in December. So I'm not entirely convinced that this number can be extrapolated to really say that the economy is doing well or otherwise.
Tushar, would you agree with that you can't extrapolate this to the entire economy? And I think this is a conversation we've been having for the last couple of times when these two macro indicators that have come out. But going into election season, let's not talk beyond just the two indicators. Looking at the election season, the two indicators that are out, the rate cut that you've had, important stakeholders saying liquidity is no longer an issue. Do you believe that there are signs for the economy to grow or are growing? Or are you seeing green shoots at the moment, Tushar?
Well, we've certainly seen some green shoots in the private capex cycle, and we came out with an extensive report on this front that, the usual narrative that, the government investments have been driving the investment cycle and that private investments are still, on the back seat. I think that narrative is gone, and I think gradually the private capex is coming back. It is not still in full swing and broad base, but yes, some sectors seems to be doing well. In terms of IIP numbers specifically, it's not an outstanding number. It's not an exceptional rise which we have seen in terms of 2.4, 2.5%, but it's still better than expected. And I think last reading was perhaps one of a blip which I think we have passed. But I think the series will continue to be volatile. There are base effects going ahead. The election-related uncertainty will kick in. Global demand is not that great, so I think exports will still struggle a bit. So I think that broad-basedness will still take some time. On the inflation, I think I will be particularly intrigued with how the food inflation has shaped up, because we saw some signs of food prices going up on a sequential basis. So if you can throw some light on that. And secondly, services inflation. Services was a big surprise in the last reading when education and healthcare prices shot up, especially in the rural areas, and RBI categorized this as a one-off rise. I think if you can throw some light on that as well, I think it will be interesting numbers to watch out for.
Okay, I'm going to go to the press release till then. Rupa, do you have any comments to make on the fact that Tushar just said that you're seeing a return of the private sector capex? That was one very sticky point. And would you agree that maybe food inflation is going to be the most important factor to watch out for at the moment?
Yes. Yes, on inflation front, I agree with him that food inflation is now very critical to define the future trajectory of CPI inflation. But as RBI had mentioned in its policy statement, certain components of core inflation like education and health, where we had seen the spikes, those were also kind of one-off. So those also won't have any persistence. And I expect core inflation also to ease going forward because of subdued demand conditions. Having said that, about the capex, I'm not so sure. We have seen some kind of a mild recovery in small ticket capex, but certainly not in large ticket capex. But you know, many people are going by the surge in credit bank credit growth numbers and interpreting that as a leading indicator for capex. But there I would like to say that because NBFC sector has slowed down, some kind of substitution has happened from NBFC sector to bank credit. But if you take the total flow of funds matrix for the country and the total credit generated by all financial intermediaries together, then I don't think the number will look that attractive. And had the capex cycle been really revived, then we would have seen a much better IIP number for December. So I am not so confident on the capex front.
Okay, I'm if I could just bring you in, Suvodeep, I'm just going through the press release and I'll give everybody the details as far as the food inflation data goes. But since we're having this interesting two important takes as far as the private sector capex being sticky and whether it's not sticky goes. There you go. Consumer food price inflation is at minus 2.17% as against 2.5% month on month. Suvodeep, good or bad or along expected lines?
Well, along expected lines, but I think it's overall for the economy as a whole, I think it's not good. With food inflation running in deflation for so long, I think, it increasingly risks distorting the rural picture. And that can have headwinds for the growth over the medium term. And I think that is something of a fallout that we should always remember from the price front. Having said that, from a monetary policy perspective or for the overall inflation perspective, obviously it's a good news that food inflation is low, and hence due to the construct of the CPI, the CPI inflation will be low. So from that perspective, yes, it just signals that another rate cut is in the offing. Something that we have already talked about, that February and April 25 basis point each should be on the cards. So I think it's pretty much in line. Obviously, the quantum of the 2.1% of CPI inflation is obviously on the lower side. We were expecting closer to a 2.4, 2.5%. So yes, from that perspective, it's a surprise. But I would be more interested in knowing what's happening on the core inflation front, whether really the core, the rural education and health part is one-off, or is it something that will persist for a few months more?
Okay, Tushar, you had brought up this whole point of food inflation. So before I calculate the rural one, minus 2.17% is where we've seen the food price inflation at. You wanted this particular data point. What do you make of it? Tushar, can you hear me? Tushar, I was asking you, you particularly wanted the food price inflation figure, 2.17%. What do you make of it?
Well, I think, in the last MPC, we kind of, had penciled in a rate cut. And one major reason why we went ahead with this call of rate cut was that, persistent decline in food inflation and the headline number being so low for such a long time, it has an impact on expectations. And if expectations kind of erode in such a drastic way, it also has an impact on, the way the wage growth pans out in the country, the way, that incentive to produce is there in the country. So I think expectations play a key role here. And I think if food prices continue to behave like this, I think it will erode the incentives for the farmers to really produce in a robust fashion. So I think this has to be corrected, and I think RBI realizes this. They are cognizant of this fact that headline inflation being at such low levels will have a wide implication for the economy. So I think that rural story of being not so great, some sort of moderation coming in rural demand is, I think, coming up in the CPI numbers as well. And I think this certainly makes a case stronger for a rate cut, I think, in April.
Inflation, incidentally, is at 2.91%, and it seems to be flat year on year. Neeraj, you've heard about the food price, you've heard about the urban. Would you say today the CPI inflation data is far more critical in analyzing the economy as opposed to the IIP? Are you on the same page as that?
Yeah, I think so. I mean, I think IIP just captures the manufacturing sector, and we understand that the economy has a much bigger sort of contribution from services, and to some extent the CPI does capture the services trends as well. So I would think that CPI is a much better indicator of what's going on in terms of prices, at least. As far as the output is concerned, I think you need to look at both IIP as well as some of the other indicators. But more than IIP and CPI itself, which tend to sort of capture a little bit of past data, I think the high frequency data that you get, which is basically things like commercial vehicle production, automobile sales, and some of these high frequency data points, all of these data points are actually giving us an indication that we are looking at a softer patch as far as the economy is concerned. And even though IIP is printing up a little higher, like some of the other commentator has said, there is hardly anything to rejoice here. I think it's the forward-looking concerns about growth are pretty much there.
Rupa Rege, here you go. Rural at -2.8, urban at -0.96, combined is -2.17. Now that you have these data point, what do you make of the inflation at large? You already said this is far more critical than looking at the IIP. I think all the panelists here are, saying that, even though your tax base is widening, you're seeing manufacturing coming back, divided house on the state of the economy. But having said that, Rupa, now you know the inflation data. Would you agree with Sanjeev Sanyal, who today morning said there is no inflation in India at the moment?
It's a fact that food price inflation is a proxy indicator of farmers' incomes. So, food inflation, or rather deflation, doesn't augur well at all for rural demand, and that is getting reflected in sustained negative growth in consumer non-durables, because they belong majorly to rural consumption basket. So I think the rural distress is very, very real, and increasingly we have seen that Rabi sowing also has not been good in terms of its distribution, and more states now, especially from northern western region, they are suffering because of hailstorms and unseasonal rains. So I think on the whole there are a lot of worries on the farm sector front, and though there has been realization at the policy making level, and both government as well as Reserve Bank of India are trying to come out with supportive policies, I think direct cash benefit transfer is not going to help much, and we have to see to it that there is a fair price or fair remuneration to farmers for their crops. I think rural economy really has not recovered from the negative demand shock, and in many major crops actually there are surpluses, and there is no enough demand, and that is getting reflected in sustained deflation in food prices.
Okay, so you're bringing up the rural distress, the fact that, the big idea of the interim budget 2019 was also the direct benefit transfer. Tushar Arora, are you on the same page, or do you differ with Rupa Rege over there that, if you look at the data here, it's continuing to point the rural distress, and of course, how can it change so fast on a monthly basis? But since she's invoked interim budget 2019, I'll ask you that question as well. A big idea by the Modi government announced on 1st of February, it can't take care of this distress that we're seeing?
Well, I think the income scheme they've announced is one part of the story. The other part of the story is making sure that the higher MSP or the minimum support prices, what they announce, farmers actually end up getting that. And I think on a long-term basis, the structural reforms which they're already doing in the form of, say, the electronic national market, the ENAM, I think that is picking up some traction with the launch of interstate mandis. Lot of trading is actually happening there. So I think if MSP can be implemented in an efficient way, if ENAMs can be boosted in a very robust way, I think it will be a full-fledged package from the government. I think the realization is very much there. I think it is just the case that these things are taking a little bit of time, I think, but certainly things seems to be moving in the right direction, at least in terms of policy. I think on the inflation side, on the core front, there would be one more interesting element to analyze would be the services inflation, and I think this is what we highlighted in the past as well, that education and healthcare, how things are shaping up there. Food inflation is fine, it is lower, I think, but how services inflation is panning out, that would ultimately determine some sort of how consumers are really experiencing inflationary pressures on the other set of items they consume. So I think services would be another interesting area to dig in.
Okay, I'm just going to get you that particular figure at the moment. But if I could just come to you, all of you, one by one, I'll get you the services figure in just exactly a second. And you have to answer this literally with just the number that you have in mind. Tushar Arora, how much of a rate cut are you expecting in April?
I think we're expecting 25 basis points in April.
Rupa Rege?
Yes, 25 bips is given, but they will also wait to see other high frequency indicators, to see the slowdown in growth. So I will say at least 20 bips.
At least 25 bips. Neeraj?
Basis points looks highly likely.
Suvodeep?
Yeah, 25 basis point rate cut in April.
So all four of you are on the same page that a 25 bips cut is coming in April. Tushar, I'll come to you first. The figure that you wanted, I'm taking it out of the press release. So as far as you want it for education, right? So for education, it's 9.53%.
So I think the big surprise last time was that education and healthcare picked up to around 8 to 9%, and I think that really led the core inflation number to be high and maybe inch up by 10 to 20 basis points last time. If this number still continues to be high, I think we need to keep a track of this, because RBI has mentioned this as a one-off increase. Maybe it will stick for some more months, but if the day comes that the food prices all of a sudden starts reversing, then I think we'll have to be very watchful that both services and food, if in case both of them start rising, then inflationary pressures could come back. But I think the way it looks like as of now, I think food is likely to remain subdued for rest of the month. So I think the rate cut expectations are still there, but just I think one watchful area would be the services inflation, because that still continues to be high.
Okay, so food, you're expecting it to stay benign. Rupa Rege, I'm going to give you the final comment. You've seen education at 9.53%. You all seem to be on the same page when food inflation goes. Watch out for health. Health is at 10.07%. So when you look at these two important components of services, this definitely needs to come down. Are you on the same page as Tushar?
Well, as I had said earlier also, I go with Reserve Bank of India that we have always seen that there are certain months in which we see sudden spikes in education and health inflation, because these revisions happen in a periodic fashion. But I don't expect it to have any persistence. If you look at the aggregate monetary demand indicators at large, then there is more factual evidence that the demand conditions are slowing down rather than improving. So I will not go just by these two components of services inflation and say that they are reflective of firming of demand conditions in the economy.
We're running out of the time, so my producers are telling me that we have to say goodbye. I'd like to thank each and every one of you for joining us and on live television, decoding inflation as well as IIP. Good numbers that have come in. Let's not get ahead of ourselves. And all the four experts and leading economists that you saw over the last 30 minutes on the same page, a 25 bips cut, according to them, is a given come April. With that, many thanks for watching.